Happy Monday, everybody. I hope you had a good weekend. Finally, it's sunny outside. It's good to be back with you on a Monday and a full week ahead. Let's review last week's short trading week. No shortage of excitement, but let's review that and preview this coming week. Monday, the markets were closed, of course, for the New Year's holiday. Tuesday, it looked as if Santa Claus might just have lost his way last year, and the rally was coming to town after all. Futures were up solidly before the open, and soft Chinese manufacturing PMI was offset by German CPI, falling from a 10% number to an 8.6%, lower than the 9.1 expected. Now, just a quick note on this. You will recall that I've used the terms absolute and incremental about moves in data. That was certainly an important incremental move that we just saw from Germany, but that's all we can hope for right now. On global and eco numbers, but 8.6% is still too high, but that was a big move down. If we get that here in the U.S., my opinion is that the Fed will have to think harder about more rate hikes. U.S. eco data poured cold water on things as recession fears came back, and the stock saw their highs for the day by 30 minutes in. Things did bleed lower before a dip buying came back in. The market clawed back most of the rest of the day. The Dow closed nearly flat, S&P down less than 0.5%, and the NASDAQ down about 0.75%. Wednesday had markets up at the open. Good news on the China reopening along with French and EU inflation data. Have we really come to this micro level? Yes, we're watching everything now. This news had markets up on the markets on the upside early. The soft landing was back on people's minds. The JOLTS report came out, and over 10 million jobs still on the list. The markets were turning around, waiting for the Fed minutes. Once the minutes came out, you had a lot of noise, but the signal did not change. Markets bounced around, but the market held its morning low and finished with moderate gains. The Dow was up about 0.5%. NASDAQ and S&P both up about 0.75%. As we knew, labor markets was the focus, and we would have rathered it stayed out of the spotlight as of Thursday. Jobless claims came in lower than expected, fell to 204,000, and that spooked the market and worried everyone about Friday's jobs numbers. Markets sold off and ended in the red. Dow down 1%, S&P down just under 1.25%. The NASDAQ was down about 1.5%. Friday jobs came in and did not disappoint, if you were a bull at least. While there was not a lot of really bad information, the data was leaning to being better as long as you had the bullish secret decoder ring on. The futures sprang into action and the markets followed with a strong day. The wage growth numbers came down as the lowest seen since August 2021. Now, very few people are extrapolating this, so I'll revisit it sometime again in the future. But if we're getting steady labor markets, which the Fed dislikes, and steady economic growth, which the Fed is trying to tamp down a bit, but we're not seeing substantial wage growth anymore, isn't that leading to a possible soft landing? I think that is what we're all hoping for. We'll have to see, but we're starting to see disinflation in a lot of places in the economy, and if we get price data that supports that, and it will bleed into CPI and PPI, even PCE, that's what we're looking for. Friday ended up on a high note, strong to the finish. The Dow ended up a bit over 2% on the day, 1.5% on the week. S&P was up 2.5% on the day and 1.5% on the week. And the NASDAQ posted the biggest gain of the week. The daily scorecard, the biggest gain on the daily scorecard, up a bit over 2.5% on the day, but the smallest weekly up only 1% on the week. A few important items to take into account for the upcoming week. First, the next big items are earnings, which start later in the week with the banks as usual. CPI is coming out Thursday as well. There is so much fear in this number right now, but I do want to note, please recall the two words I've used in the past and earlier already in this video. Incremental and absolute. As for the inflation data like this, please note that going into this week, we have gone from a CPI read of 9.1% in July to last month's 7.1. Absolutely still a high number. PPI also from an 11.1 high in July to a 7.4 last month. Are we incrementally going in the right direction? Maybe so. We'll see how that goes. A few concerns I want to add in. First, China news is not all good. Yes, we're seeing the zero COVID policy go away and things reopen, but that will not happen without some hiccups. They still have a vaccine that is less effective than the U.S. vaccines and low vaccination rates. Maybe if they had companies like McDonald's there, they just changed their French fry packaging to support and encourage vaccinations in the United States. This is putting a stall on some of the supply chains. Some manufacturing is being halted, and that's making waves, pun intended, at the largest ports in the world. Shanghai is seeing things get slower, as is Shenzhen, the fourth largest port globally, and oh, by the way, where China's Apple's Chinese products come through. There's a new Speaker of the House. If you paid any attention to the shenanigans going on in D.C. last week, not since 1923 have there been more than 9 votes for Speaker, ever. Never have there been this many. In fact, not in 100 years has been there a need for more than 1 vote. Does this matter to the markets right now? I would argue not, but make no mistake, this is a huge problem, and we'll probably see later this year. By some estimates in late summer, what is that? That pesky debt ceiling will come back into play, and there will have to be some agreement to get that extension passed. If they can't decide on a House Speaker, what does that say for the upcoming debate? Which is tough on a good day. Can I tell you that I do have concern? The markets do not like those arguments. There have been government shutdown, at least 2 government shutdowns in the past 10 years or so, and the market did not like them. Along with the important eco data, as I just mentioned, CPI, also employment numbers, all on Thursday. We'll get small business optimism on Tuesday, and the University of Michigan survey sentiment on sentiment, but really more importantly on the forward expectations of inflation. And the Fed heads are back. Bostic, Daly on Monday, Powell on Tuesday, Harkin and Bullard on Thursday. We'll close up today and dig into the week. Next Monday is a market holiday again, MLK Jr. Day. So the market update will be along on Tuesday from a special location. Stay tuned. Have a great week.